Best Tech ETFs to buy in 2023. In 2022, the performance of the technology sector was nothing short of disastrous, in contrast to the energy sector, which was a success story. Chipmaker NVIDIA Corporation, ticker NVDA, electric vehicle icon Tesla Inc., TSLA, and Facebook parent company Meta Platforms Inc. Meta were among the most notable companies to suffer significant losses in 2022. Each of these companies' stock prices dropped by at least 50% during the year. On the other hand, it seems like 2023 will be a very different tale. A staggering gain of 26.7% for the Nasdaq and an amazing gain of 12% for the S&P Wink with tongue sticking out 500 may be attributed to the impressive performance of the technology sector through June 9th. This has effectively put the whole U.S. stock market on its back. In 2022, many people thought the same names were about as valuable as mud. However, in 2022, the tables were dramatically changed. As of the 9th of June, both NVIDIA and Meta Platforms have seen their respective share prices increase by 120.2% and 165.4% respectively in 2023. When the only investments performing year-to-date are the largest technology companies, chasing the story is easy, says Chris Burkle, an investment advisor and the president of Axis Financial in Edmond, Oklahoma. Axis Financial is located in Edmond. It's what everyone sees, but past performance isn't indicative of future results, or else General Electric would still be one of the largest companies on earth, says one analyst. Exchange-traded funds, often known as ETFs, give investors the ability to hold multiple of the most prominent brands in the technology industry under a single ticker, which simplifies portfolio management and ensures that investors won't be left out of the action. Even in the best of circumstances, exchange-traded funds, ETFs, which can hold dozens or even hundreds of stocks, can be a wise alternative to picking individual stocks. To identify the most suitable technology ETF for your portfolio, however, you will still need to conduct extensive study. Number 5. The First Trust Nasdaq Cybersecurity Exchange Traded Fund, CIBR. According to Daniel Milan, managing partner and investment advisor representative at Cornerstone Financial Services in Southfield, Michigan, it is important to be extremely targeted within the technology sector due to the inherent risks associated with a slowing economy and rising interest rates, and their impact on cyclical sectors. Considering the current uncertainty in both the economy and equity markets, Milan says, it is important to be extremely targeted within the technology sector due to the inherent risks associated with a slowing economy and rising interest rates. To accomplish this, he proposes concentrating on an area of information technology that is rapidly becoming an essential component of business spending, particularly cybersecurity. As a result, he thinks that CIBR is a good choice for a tech ETF. Even though the majority of the companies it owns are in the software and information technology sectors, it has diversified its holdings beyond the realm of pure technology to include industries such as defense and aerospace. Examples of such companies include Thales SA, HO.FP, which is a manufacturer of defense and aerospace equipment, and Booz Allen Hamilton Holding Corp., BAH, a military contractor. Among the companies whose names are more likely to be found are Broadcom Inc., AVGO, the fund's largest holding in terms of weighting, Palo Alto Networks Inc., PANW, Fortinet Inc., FTNT, and Cisco Systems Inc., CSCO. Broadcom Inc., AVGO, is one of the names that you would be more likely to expect to find. This is still a pretty targeted play in the technology sector, with only 35 holdings, but the fact that there are so few of them only helps it pair better with the other assets in your portfolio. Invesco S&P Wink with tongue sticking out 500 equal weight technology ETF, RYT, comes in at number 4. When you couple the fact that the technology industry is typically led by giants with exchange-traded funds that are weighted by market capitalization, you typically get top-heavy funds. According to Burkle, market cap-weighted ETFs weigh the underlying holdings based on the size of the company, which indicates that larger companies receive a disproportionate weight of investment money. As an illustration, he uses the Invesco Nasdaq 100 ETF, QQQM, which allocates around 13 cents of every dollar invested to Microsoft Corporation, MSFT, whereas Texas Instruments Inc., TXN, receives only 1 penny per dollar invested. He suggests looking for ETFs that use a variety of weighting schemes if you want to avoid taking on that risk. For instance, RYT uses something called an equal weight method, which means that it assigns roughly the same amount of weight to each holding regardless of the size of the company. If you take a closer look, you'll notice that even the fund's largest position, NVIDIA, accounts for only 1.69% of the total assets of the fund as a whole. The application of this equal weight strategy results in a portfolio that is significantly more diversified, with just roughly 15% of the total assets invested in the top 10 holdings. Therefore, RYT is deserving of your consideration if you are seeking a play that is properly diversified in the technology sector and has a fair expenditure ratio of only 0.4%. Number 3. The Invesco QQQ Trust, symbol QQQ. You might enjoy QQQ if what you're looking for is less of a head-first dive into technology and more of a gentle progression into it. Even though it is not a true technology exchange traded fund, ETF, Invesco's $191 billion fund is one of the 5 largest exchange-traded products in the United States. It is also an extremely liquid option to invest in the best technology stocks for 2023, because it is benchmarked to the NASDAQ 100 index, which compiles the largest 100 or so companies listed on the NASDAQ exchange. The fund is not limited to investing in a single industry or area, because that index has traditionally placed a higher weighting on technological companies and does not include traditional U.S. stocks traded on the New York Stock Exchange, such as JP Morgan Chase and AMP Co., JPM, and Johnson and AMP Johnson, J&J. The resulting fund has a tilt toward technological companies. To be more specific, about 60% of its assets are invested in the technology sector, whereas just 28% of the S&AMP Wink with tongue sticking out 500's assets are invested in this industry. Number 2. The Vanguard Information Technology Exchange Traded Fund, VGT. VGT has around $53.1 billion in net assets at present, making it the largest truly sector-specific technology ETF available. VGT takes the opposite approach, giving a far higher priority to the larger technology companies that are typically included in QQQ, which means that it also includes certain firms that aren't part of the big tech stalwarts. As a result of the fund's market weighting system, in which larger companies make up a greater proportion of the portfolio, 62% of the fund's total assets are contained inside the top 10 positions alone, with Apple Inc., AAPL, and Microsoft Corp., MSFT, accounting for 41% of that total between the two of them. Despite this, the analysts at Morningstar are positive about this fund, awarding it 5 out of 5 stars and a gold medal. This indicates that the researchers have the most conviction that VGT will exceed a relevant index or the majority of its competitors throughout a market cycle. In point of fact, as of the beginning of June 2023, VGT is the only technology ETF to have been awarded both 5 stars and a gold medal. Number 1. Defiance Quantum ETF, QTUM. Artificial intelligence and machine learning are topics that frequently come up in today's conversations regarding various technological advancements. The way people live, work, and play is being transformed as a result of the transformational technologies that are reshaping industries beyond the tech sector. If the thought of a technology ETF that is concentrated on cutting-edge innovations is what you have in mind, then QTUM might be the one for you. On the website for the fund, it is said that it seeks to invest in companies on the forefront of machine learning, quantum computing, cloud computing, and other transformative computing technologies by following the Blue Star Quantum Computing and Machine Learning Index, BQTUM. This index, in turn, follows 71 global equities of varying sizes. You'll find a mix of well-known companies among those 71 stocks, such as NVIDIA, Mitsubishi Electric Corp., 6503.T, and Marvell Technology Inc., MRVL. You'll also find some companies that you might not be as familiar with, such as IonQ Inc., IONQ, a company that designs quantum computing hardware and software, and Renesas Electronics Corp. 6723.T, a Japanese semiconductor manufacturer. Do you like it? Kindly give your valuable response in our comment section below. And don't forget to subscribe to our YouTube channel for more interesting and informative videos.